How the stock market really works for beginners. Imagine this. You buy a stock for $100. A week later, it's $150. You feel invincible. Then the next week it drops to $80. Panic sets in. Welcome to the stock market. It's not magic. It's not a game you can win by luck. It's a machine, fast, unpredictable, and powered by human emotions. Most beginners think buying a stock is buying a piece of a company. Technically, yes, but in reality, you're buying a contract, a claim on future expectations. Will the company grow? Will profits rise? Will consumers buy the product? Every tiny factor, interest rates, politics, even a tweet can move your stock up or down. The market itself is a giant digital bazaar. Exchanges like the NYSE or NASDAQ list millions of shares. Traders, algorithms, and investors shout their guesses into the void. Prices shift instantly. And here's a secret beginners often miss. Most gains in the market don't come from timing or insider knowledge. They come from time, patience, discipline. Volatility is part of the game. Even safe stocks wobble daily. Expecting smooth growth is unrealistic. And yet headlines obsess over spikes. Stock jumps 10% today. Rarely mention the months it dropped 20% before. Emotionally, losses hurt more than gains feel good. That's why crashes feel terrifying. Here's another twist. Algorithms drive about 70% of trades in U.S. markets. They react faster than humans. News, rumors, even emojis can trigger massive swings. A CEO's offhand comment can erase billions in seconds. Humans can't compete with that speed, which is why beginners get burned chasing hype. Then there's leverage. You can borrow money to buy more stock. This amplifies gains, but also losses. One bad week can wipe out months of careful investing. That's why some platforms that seem beginner-friendly can actually be dangerous. Now let's talk expectations versus reality. Social media loves stories of overnight millionaires. The truth, most investors see gains steadily over decades, not days. The market rewards consistency, not luck. And yet humans chase drama, the spikes, the hype, the next big thing. That's when mistakes happen. So how does the market really work? It's a system of buyers and sellers constantly balancing optimism and fear. Prices reflect expectations, not guarantees. The longer you hold, the more the system favors patience over luck. Short-term swings are chaos. Long-term growth is math. Here's the uncomfortable truth. Even experts can't predict the market. Not day to day, not week to week. The market is inherently unpredictable. And yet, it continues to operate, transferring wealth from the impatient to the disciplined, from greed to caution, every single day. The key for beginners is not finding the hot stock, it's understanding the mechanics, recognizing volatility, respecting time, avoiding hype, accepting uncertainty. Once you do, the market becomes less scary and more manageable. And here's the final thought. The stock market doesn't care about you or me. It doesn't make promises. It moves relentlessly, reflecting human behavior, global systems, and the limits